Hello and welcome to the Mortgage Note Podcast. My name is Kimberley Haas. Today we're sitting down with Sam Mehta. He is the CEO of Verity Global Solutions. How are you doing today, Sam?
Very well. Thanks for having me.
Yes, yes. Well, we're excited to have you on. We want to talk a little bit about artificial intelligence and how lenders can really capitalize on what's available in the market. But before we get started, maybe you could just introduce yourself to the audience and tell us a little bit about what Verity Global Solutions provides.
Verity is a labor and automation solution. So we have a combination of offshore teams where we provide outsourced services for mortgage companies and title companies. And we have a built-in suite of automation to try to enhance the overall operations.
Okay, and where are you folks located?
So looking in Mumbai mostly, all over the country actually, but Mumbai, Bangalore, Pune. Mhm.
Okay, great.
Yeah.
And so tell me a little bit about how people are using Verity in order to enhance their business, just in a small synopsis, because we're going to get into that a little bit later on in the podcast.
Sure. So essentially, our role is to provide lift to our clients' operations and at the same time help cut cost so that they can bring down the cost per loan, which is really the most important part of the mortgage business. So we have a full range of solutions going from the initial order entry all the way down to um, investor submission. And the idea is that if you look at what goes into producing a loan, we give clients the ability to be able to do each piece of the loan production using the right skill at the right price, no matter where it is in the world. So the idea is that the sum total of um, doing the work at the best possible cost component gives you the best overall cost of producing the loan.
And as you know, so many people over the course of the last couple of years have been talking about artificial intelligence and how it can really, excuse me, help different lenders in different capacities, whether it be transcribing calls, whether it be offering prompts to people as they're going through their calls, or even marketing. But there's also a sense of a little bit of AI fatigue that I've noticed when I've been at different conferences and stuff. People who aren't using AI feel a little bit overwhelmed. And even people who are using AI feel like there's so many more tools that they could add to their toolbox. They're also feeling a little bit overwhelmed and frankly, fatigued. So maybe you could tell us, Sam, a little bit about what AI fatigue is, in your opinion, and how people break through all this noise when it comes to this hot,
Right,
topic.
right. So AI is definitely very exciting. Over the course of time, I expect it to get better and better in terms of how we're able to manage our daily workflows, not just in mortgage, but obviously across all industries. And we're seeing a lot of that today. Um, when it comes to mortgage, what it seems like talking to all our clients and different folks in the industry, particularly lenders, is that the challenge is how do you tie the features from AI into a value, right? So to give you an example of that, think about document sorting, right, and indexing. You can accelerate that tremendously, but the question is, did that lower your cost per loan? Did it help you close a loan 3 days faster, right? So that's the difference between feature and value, right? So that's a small example. That's kind of where I'm going with this thing is on a buyer behavior, from a buyer behavior aspect, you have a pool of lenders that don't quite inherently know what AI is, right? That itself causes fatigue because it's an exhausting process. Um, Piloting the technology, implementing the technology, understanding the success metrics, that alone is a complicated process, especially when people are not necessarily staffed to handle that today. AI throws a lot of information at you, right? And then you have humans that are evaluating the validity, right? And then making sure that they're comfortable using AI. Um, so that causes another issue. The second part is a decision process. Okay, which one is the best technology, right? Because you've got so many solutions in the market that a lot of them claim to do the same thing. So how do you decide which one is the best? Uh, are you paying the right price? How does the, and as you know, with most technology, uh, the price of technology tends to diminish very quickly over time, right? So the question is, did you buy it at the right price? Did you buy it at the right point in time, right? Because there's risk of being at the bleeding edge, right? Do you buy when it's at the bleeding edge, or do you buy it when it's more generally available and they've worked out the kinks and it's more generally used, and we know this is a pretty good price point. So that causes another complexity. And the third thing is, hey, if I bought something today, is it going to remain the best technology in the market, say even 6 to 12 months from now, because this thing is changing so fast, right? So that's exhausting from a buyer standpoint, right? Um, the other thing is, or the risk that clients are running, and this I hear this all the time, is, you know, automating for automation's sake, right? Hey, everybody's automating. Maybe I need to automate, right? But the question is, what are you automating, right? So if you look at your entire process, your entire production process, the question is, have you implemented automation in a way that you affected the two main components, at least in my mind, from a business standpoint, is are you um, reducing or optimizing labor? Because that's what this comes down to. Are you actually able to reduce cost? Obviously, there's the opportunity for reducing errors, but that still to be seen because people have not fully trusted it yet, right? And just overall, are you able to close loans faster? Because it seems like there's a lot of technology that helps you automate the upfront part of the loan origination process, but a vast majority of it still remains manual. So, how are you affecting the overall production process, production cost, right? What is that? What does that look like? And so these are like the main things I hear from our clients in terms of how they think about automation, right? And then there's another hybrid model evolving like what we do, right? We are a BPO, and we're also investing in technology, right? So our message to our clients is, hey, just wait because we're automating. Uh, the exception, the exceptions or the trust that you may not have in automation, we're able to supplement that with labor, right? Which is already at a much lower cost of production, and we can spread the cost between multiple customers. So that's the other thing that customers struggle with is, okay, the one's a CapEx decision, one is an OpEx decision, which one is better, right? So I think those are like the main AI fatigue points that I run into with a lot of customers, lack of understanding exactly where am I implementing it. If I do it, is it actually making a difference? How has it affected the main metrics of my business? Is it actually helping me run a better business, right? And automation for automation's sake is a big risk, and it happens a lot, right? If you have a broken process and you automate that, you're going to cause more problems later. So,
That's very, very true. So, Sam, I mean, let me just go over this just to make sure that our listeners are hearing this right. Because there's a lot of information out there. But based upon what you were just telling me, when people are asking, and when they're thinking about implementing AI, or even after they've implemented AI, they should keep in the forefront of their mind they're thinking about return on investment, the big thing that they're thinking about is reducing operating costs and closing loans faster. Those are the two main things that they should be looking for when it comes to any kind of artificial intelligence. Is that correct?
Sure. Yeah, those there's multiple, but those are two that stand out to me a lot. Uh-huh.
Right.
Yeah.
Yeah. And this was a topic, you brought up a topic that was brought up during the Mortgage Bankers Association's annual expo in October. And one of the panels was about whether or not somebody should build their own system up or if they should work with a company that it can, like you say, spread the cost amongst multiple lenders and do some of those checks on whether the bleeding edge is worth it or not for
Right.
companies because they're specializing in providing this service for
Right.
lenders, which is what I understand you're doing there at Verity, right?
Correct. Yeah.
Yeah.
Yeah. So, we tend to be not even close to the bleeding edge. We have obviously we already have a low cost solution, right? And our model allows us to have uh, internal QC solutions because our labor rates are better. And then as the technology gets better and better and more mature and cheaper, we implement it. So the idea is we still try to keep that cost integrity, but we still take advantage of the new technology, right? The analogy I like to think of is if you go to Best Buy, you may find a beautiful television today that costs $2,000, right? Well, in 6 months, that TV could be worth $800, right? So the question is, it's like catching a falling knife. Where exactly where did you catch it, right? So that's the way we think about it.
I think that makes sense, and that'll make sense for a lot of our readers and listeners
Mhm.
as well. And of course, one of the big selling points for artificial intelligence is our next topic. As people have talked about AI for the last couple of years, they keep on hammering on the point that this will allow lenders to scale without rehiring when there is an anticipated growth. Now, of course, that metric for when that growth will happen keeps on getting
Right.
put off. And I know that's to the frustration of everybody out there in lending and real estate. But let's talk a little bit about how companies should plan to scale for that anticipated growth and what that might look like with your cap on as the CEO of Verity Global Solutions, providing these AI services for companies.
Right. So the the original thought, if I go back a few months or maybe even a year, was that, hey, when this next rebound comes back, we're going to have these tools and technologies so I can actually, work with a smaller team and produce more work and things like that. You know, it hasn't quite come to fruition from the standpoint that the technology, if you see, most of it in the market is still solving point problems, right? Call it extracting information for income calculations. You have, extract information from W-2s and tax returns and things like that, right? That's gotten very good, right? Um, you have document indexing and sorting, right? Things like that have just gotten better and better over time, right? But the question is, again, I go back to mortgage is an exception-driven business, right? So if you so going back to your question is what should folks be doing, right? One is you should study your entire process, right? And make sure you've got your process very well documented. You understand where all the pitfalls are, right? And you've got a clean process because you don't want to automate a broken process. Automation doesn't come solve your problems, right? It can repeat a good process or just cause big problems if you have problems today, right? Um, but the important part that folks need to really pay attention to is how are these different pieces of automation tied together? So, there's not really an integration between all of these processes. When you look at the overall loan production process, the question is when exceptions get thrown out, how are you managing those, right? Now, if you think about the mortgage labor force, post-pandemic, there's been a massive outflow of people that, were super experts at all these skills. If you think about, post-close QC, you think about underwriting, right? A lot of these folks have left the industry. So imagine a situation where, you have we don't expect to have a very fast uptick in origination volumes. They're talking about 8%, for the next year or so. But imagine not having the right skill to manage your exceptions, right? It takes a year to onboard, 12 to 18 months to onboard, the proper skill to help you with managing exceptions. So, you've got this challenge where AI, like I said, is still solving point problems, right? In a good process, not a broken process. And you need the continuity. There's no solution that goes front to back and just gives you an answer. There's no black box solution like that, right? So you still have to be in there doing all these things. Um, so the lack of skilled labor, the unknown factor of who's going to come back to the industry when the market comes back, right? And not having a point-to-point AI solution, those are the challenges you're kind of faced with today, right? So that is a problem that people have to solve for, is how do we scale for that, right? People had this impression that AI um, would basically eliminate the need for certain parts of labor, but we're not there at all, right? I don't think we're even close. So the risk you run is, are the exception levels that you were expecting, are they higher than what you're anticipating today? And are you staffed for it, right? The other big challenge is look at the volatility in this market, right? You can't just go out and hire people full time and pay huge salaries to say, okay, well, come on board and build it and they will come, right? That's also a problem. Um, so so what I find with a lot of the clients is that and it's also a big mistake in the market. People treat AI and outsourcing as mutually exclusive, as this or that. Well, actually, the point that I try to make with anybody I talk to is, that's actually a myth, a bad myth. And you should really be thinking about keeping all your critical decisions in-house, right? Borrower experience is very critical to keep in-house. Critical decisions, problem solving, et cetera. But a combination of your core A plus team, automation, and outsourcing that manages your exceptions gives you that magic formula of full front to back execution at the right price, right? Because, if you think about an underwriter, for example, if the underwriter is making, say, $50 an hour, let's pick a number, right? $50 an hour is the
Right.
is an
Yeah.
hourly rate, right? So what is the best value of that underwriter? Just make credit decisions all day long, right? If they're spending 60% of their time in doing other work, appraisal reviews or, whatever, putting income calculations and things like that. Um, Somebody as a pre-underwriter could be feeding the information to them so they're maximizing their time during the week, making credit decisions for most of the time. Otherwise, they're doing $20 an hour work for half the week or more, and then $50 work for the rest of the time, right? So those translate to inefficient uh, cost per loan, right? And that's one underwriter. Imagine you have 10, right? So those are the things you're going to need to think about, is how do I maximize automation, the best outsource skill to help me with all that production, manage exceptions, and to be able to connect the dots between different automation and allow me to do the highest value work. When you do that, that's when you have the magic formula, at least in my opinion.
Yeah. It really sounds to me, Sam, like mortgage is no different than any other industry when it comes to AI. There are so many exciting advancements and things that we can do with AI, but it really, especially since there is no black box solution. It's something that, in my opinion, lenders need to think about as a tool. And what kind of tools am I going to get the people that I have staffed already to make them the best that they can be? So, like you said, they're not spending a lot of time on those stare and compare or more administrative type tasks and really putting their time and their expertise into what they love to do the most, which is closing loans, probably, right? If you think
Right.
about it at the end of the
Yeah,
day.
that's the name of the game, right? So yeah,
Yeah, that
so
special sense of satisfaction, right? When it's all
right,
said
yeah,
and done. How do we get them
yeah,
there faster, right?
right, right. And it will happen. It's just not, it'll happen over time, but we just, I'm talking about now, today's horizon where we are, right? Um, it's not quite there. So
Yeah. Yeah.
yeah,
And in the meantime, we're going to benefit from these tools as they come along and they're plugged into programs. And whether or not we ever get to a black box solution is remains to be seen, quite frankly.
yeah.
But with that being said, what are some of the current options for mortgage professionals that are out there on the market? Many of our readers are mortgage brokers. Some of them are loan officers, and they may be in leadership at any size lender. Maybe we could start with brokers first, like what a broker should be looking for when they're thinking about AI.
When you say broker, I'm just talking about, I'm gonna just talk about small lenders, right?
Okay, sounds good. Yeah, that's fair.
So when I small lenders, at least in my opinion, should not worry about investing in technology, and they should be looking for some partners that have the ability to help them produce loans at the right price, and hopefully they have some automation implemented, right? Medium-sized lenders, now that becomes a little different, right? They have the ability to implement point solutions. Um, they should make sure that they implement the solutions in a way that it's not just feature, it's also value, right? So to understand your process, um, know the problem you're trying to solve, right? Know the areas where you're trying to solve problems, right? Because you also the priority of how you spend your money in a volatile market that is still recovering also matters, right? So if you have four areas where you feel you can benefit from automation, we'll prioritize them and spend the money where it makes sense first, right? So that's the other thing. Um, and just don't, the challenge with the mortgage business also is that, and I'm not saying everybody does this, but I've seen this happen on multiple occasions where, you know, you're losing money per loan, but then basically you're trying to increase your volume to work your way out of that problem. But in reality, all you've done is magnify the problem times, whatever number of loans you just decided to do more. So, you kind of need the lenders that will win the next um, upcycle are the ones that have uh, really honed into their processes, right? And figured out how they're going to make money per loan, right? Because there's only so much fixed cost you can offset when you start to produce more loans. So, it's very important that you're really, really looking at your financials, your P&Ls, looking at the cost categories, chart of accounts, ranking them from the highest to the lowest, and trying to see, what you can impact first, second, third, fourth, and then figure out, okay, what is right for an automation major disruption, right? I mean, how much is going to affect my overall business? So that's the discipline that business owners should definitely be employing. And so I don't know if I answered your question, but I feel like I'm going in circles right now.
No, no, no. I think that answers the question very well, Sam.
Yeah.
And I really like how you emphasize that once again, AI cannot solve the problems in your processes. It's only going to amplify the problem. You have to start with a good process to begin with.
Correct.
And that's one of the, I don't want to say weird nuances, but an exception, I guess, to AI and that thought pattern that like, oh, this could fix something. No, it moves in a little bit of a different way. And then the other thing that you really mentioned, that I really liked is that, this is something that is going to help people who already have a winning strategy. And maybe that's the first step with this. If you are losing money on loans now, you're going to amplify that problem when you increase volume.
Yeah.
I'm not a mathematician, but I think anybody can see that.
Right.
So people should be working with the right partners, but getting into the right mindset to begin with sounds like the starting point. Is that kind of where you're going with that, Sam?
Yeah, I mean, it's pretty fundamental and everybody knows it, but it's always a good reminder. You get stuck in the day to day and you just kind of lose track of it sometimes. Like, okay, I gotta really pay attention to this, and that's really that discipline is pretty important when you're making any decisions, whether you're, you know, uh, in heck, buying a computer for the office, right? I mean, you need to know exactly where you stand, right? Um, so that's where I was going with that.
Yeah. Yeah. Well, I've been doing a lot of asking of the questions. Was there anything that you wanted to make sure that we touched on before we wrap up today's interview?
Um, yeah, I know we talked a lot about AI fatigue because that's a direction we headed off with to start off with. But I want to make sure that I don't um, sound too gloom and doom AI because in a good process with a well-defined SOP, SOW around some functions that customers want to automate, right? It can definitely work, but just very clearly know the limitations. It's not a panacea, right? Don't forget mortgage is an exception business, right? And while you can do some things faster, potentially cleaner, but the biggest question is, has it really translated to the bottom line, right? And I feel like the bottom line for everybody should drive those decisions, right? So um, it's a big difference between a nice to have and a must have. You kind of really want to differentiate between those two, right? And from my side of the work, if I bring you to my work for a second, um, I try my best to let people know as much as possible is, hey, just remember that AI and getting a good outsource partner is not mutually exclusive. They actually play very well together. Actually, they're critical together, right? Because I've seen some people come back and say, well, just going to automate that, right? Well, I would say not quite. Because again, like I said, it's a point solution versus an overall process. And you got to have that support to manage exceptions. There's a lot of work that automation that's complex for automation, right? But too routine for our clients' internal staff. That's where you got to think about how you plug all three together. And that really does give you the lowest cost per loan, which is really what everybody should be focused on.
Hmm. Awesome. Well, thank you so much for your time today. I'm sure everybody is going to appreciate listening to this and reading our interview online.
Great.
Yeah. Well, thank you very much, everybody who has been listening in today. We really appreciate it. Once again, I've been sitting down with Sam Mehta. He's the CEO of Verity Global Solutions. My name is Kimberley Haas. Have a great day.